All right, folks, welcome to the lecture, What is CRT? Now, if you came to watch this video and you're expecting some a quick spoon-fed 1, 2, 3 sort of video, then you can simply click out, right? This video is for those who want to achieve a deeper understanding of the charts, and therefore, of course, potentially having the chance to milk the markets a lot more than someone who doesn't understand CRT. All right, so before we start, stop whatever you're doing, all right? Grab a cup of coffee or tea or milk, whatever, and watch, pay attention. And put aside all your preconceived notions about whether it's me, whether it's my concepts, whether it's ICT, whatever. Forget all you know and start from zero. Just watch. And of course, I don't need to say it, but take notes. So, to begin with, what is CRT? CRT stands for Candle Range Theory. Right? Candle Range Theory. Which is simply every single candle is a range. Right? All candles are ranges. And this range, this candle you see, right? It can either be broken out of in the next candle, so the next candle closes below this candle, and then it continues lower, or it can be wicked below and closed above, turtle souped, and then you expect a rally, right? Or vice versa, right? So every single candle you see can either be broken out of or turtle souped. There is no third option, right? Yes, you might have some inside bars, so candle number 1, inside bars, and then turtle soup, but it's the same result. Now, knowing this is the first thing. The second thing is knowing which candle you want to pick, right? Most traders, whether it's ICT or otherwise, they don't know what they are, right? Let me elaborate on that. What is this? What do you see? A box. Now what do you see? Very simple. This is the monthly range, right? So this is the monthly candle. So monthly open, low, high, close, right? It's a bullish monthly candle. This is also a weekly candle. Weekly open on Sunday, right? Open, low, high, close. A bullish weekly candle. This is also a daily candle, right? Daily open, low, high, close. This is also a 4-hour candle. Open, low, high, close. This is also a 1-hour candle. Open, low, high, close. So step 1 is define the sort of range you're trying to trade. Are you trying to trade the monthly range? Then wait for the monthly power of 3. The weekly range, the daily range, they're all the same exact thing, simply at different speeds, right? And this is the meaning of price is fractal, right? And that's your mission, is go right now and mark the open and the close of a monthly candle and look at what do you see. I'll do it for you for the monthly, and then you go and do it for the weekly and daily and whatever. All right, so you mark monthly open, you go to the 4 hour, right? This is a monthly candle, right? This is a monthly candle, another monthly candle. And now you do the same thing with the rest of the time frames, right? I'll help you the weekly. So monthly, 4 hour, right? Then you have weekly, candle, 1 hour. Then you have daily candle, 15-minute, right? 4 hour candle, 5-minute, and so on. So that's how you look at the power of 3 of each of those candles. So monthly, four hour, weekly, 1 hour, daily, and you do the daily and the 4 hour, right? Daily, 15-minute, and the 4 hour candle, 5-minute. Right, so go and see how they all look the exact same, right? Because they are the same. Because whatever happens in the monthly time frame, and this is a lesson on fractality, is going to happen on the 1 hour, right? So the monthly candle is nothing more than a 1 hour candle, which is moving at a slower pace. The 5-minute candle is a monthly candle which is printing really fast. And when you know this, then you can practice, you can get in a lot of practice on the lower time frames, right? So that's a lot of, let's assume this is a monthly candle each, right? So this is years of experience getting gathered by studying the candles and their relationships on the lower time frame, right? You're practicing. Because this can be many monthly candles. If I hide this time frame right now, right? This can be a yearly chart, a 10-year chart, right? So use the fractal nature of price to get in practice. Now, is this rule fixed? No, because every time frame is printing at its own pace. And anyone who tells you that there's a fixed time frame alignment is lying or is simply uninformed, right? There is no sequence of time frame alignment. Because each time frame is printing at its own pace. You can simply tailor some time frames with others, right? You can pair them together, such as this, right? This is how I do it to see the power of 3. This is how to see the power of 3 of each candle, right? And note this down. The astute pupil is noting down everything I'm saying and his questions. Now, so step 1 is defining what are you? Or what do you want to do this week at least, right? Do you want to trade the daily range? Do you want to trade the monthly range, the weekly range of next week, of this week, the 4 hour range, right? One of my favorites. So step 1 is decide. And I am mostly a daily and 4 hour range trader. If there's a clean weekly range, then I'll take it, right? So that's step 1. Step 1 is decide what range you want to trade. Now, here's the fun part. Every single range is a candle, and every single range has some sort of relationship with the range before it, right? That's turtle soup. What you're waiting for is open, and this happens on every single candle, right? And knowing the fractal nature of price, by the way, it alleviates a lot of FOMO, because you know that if I fucked up, excuse my language, if I screwed up in today's daily range, then I have a reset tomorrow at midnight New York. Right? It's a whole new opportunity. If I messed up this weekly range, then I have another weekly range waiting for me next week Sunday. If I messed up the 4-hour range, then I simply wait. Right? It's like buses. Daily range, journey, daily range, journey, daily range, journey. Each one is a new opportunity. And in each one, you're looking to catch the open. If you're bullish, you go the open. It smacks into a bullish key level or an old low, turtle soup, and then it rallies. All right? If you can catch that, then you can build your whole trading career on that. All right? And vice versa. If you're bearish, then simply wait for an open, bearish key level on the time frame higher than the power through time frame. Open, key level / liquidity pool, turtle soup, and then decline. Right? That's all that's ever happening. And go back test this. Right? That's the summary of the charts. Open, turtle soup, decline. Open, key level, decline. Right? Let's write that down. It's important. So you have to build your entire all your models, all your trading. All your trading happens within this. Everything. And anyone who adds anything more to this is full of shit. All right? This is all I'm looking at. And this is why, by the way, I'm going to link you to, I'm going to give you a homework at the end of this video, which is reverse engineer all my trades of 2023 and this year. Right? I'll link the PDF. As you know, or you may not know, you know now. Now, I'm the world record holder of the highest accuracy in the entire trading industry with an 80% accuracy, right? Publicly verifiable on Twitter. Right now, you can go and check it out, right? I'll link to it. And how did I do that? With this, and that gives me the authority to speak, because when someone speaks on a topic, right, you always have to ask yourself, who is he to tell me this? Which is natural, right? Because you don't want to, if you don't have something, you can't give it, right? You can't pour from an empty cup. So when you watch someone, you should ask yourself, what's his credentials? What qualifies him to say what he's saying? And in my case, the highest accuracy world record in the world, and I doubt it'll be beaten. All right, how this? Open, if I'm bearish, open, key level, turtle soup. Right? Very basic, very simple. There's some intricacies and some details, but this is the base premise of everything. Open, key level, turtle soup. Right? Inverse scale, open, key level, turtle soup. Key level, turtle soup, before some SMT, we're going to have them here as well. All right? But open, key level, turtle soup. Remove the key level. Open, old low, turtle soup. Right? And open, old high, turtle soup. With the high being a wicker body. Right? That's all that's happening. Can it get more simple than that? Now, if it's still not simple enough, then I can't help you. Go trade the RSI. Right? Elliott wave, harmonics, some other nonsense. But this is the power of three. This is the open, high, low, and close. This is the summary of everything you have to learn. Now, at first, you might find trouble. You might mark your key level, and then it keeps going higher. Then you were wrong. Then you journal, right? You journal and write down, why did it go up? I expected down, it went up. Why? Right? Reverse engineer. And eventually, with practice, with the third, fourth, fifth, 10th, 100th time, it becomes second nature. Right? You can predict to the pip, open, high, to the pip, turtle soup, decline. Right? So build everything you do around this. This is the base. Now, visually, and here's the fun part, this is where CRT comes in handy, right? Because CRT says that each candle is a range. So this range is a candle. The monthly range is a candle. The weekly range is a candle, right? If you look at this monthly candle, it's a range, right? Go to the 4 hour, it's a range. Same with the weekly candle. If you go on the 1 hour, it's a range, right? So every candle is a range, and this range can either be turtle souped, right, or broken out of. In this case, let's look at an example of each, right? So first of all, the example for turtle soup. This one specific candle is a range, right? And this is where we come into some time theory, right? Week 1, accumulation. Week 2, manipulation. And the rest, distribution. Week 3, right? A and D. Each one is a specific candle. That's what they don't tell you. They'll tell you accumulation, manipulation, distribution, but they won't tell you which ones. They won't tell you each one is a specific candle you can look at, right? This candle represents time and price. So this specific candle is the CRT high and low. Now, if a candle gets a turtle soup, then you can, with an extremely high probability, you can expect it to at least trade into the 50%. And this, what I said just now, is enough to build an entire trading career. Any candle, turtle soup, or SMT, and then to the 50%. Boom, that's your trade. And then you wait for the next one. All right, so let's look at the 1 hour. Exactly what happened. All right, so that specific range of the candle. Weekly candle, Sunday. All right, to the next weekly candle. Weekly open, Sunday 5 p.m. Right? True week open, of course, is Monday. But this is the premise. That's candle number 1, right? So candle number 1 is there. And then as soon as this specific candle of this one specific week is turtle souped, then you're going to take price to the 50% of the range. So candle 1 is a range, candle 2 is manipulation of the range, and candle 3 is distribution to the target, right? 50%, and then the opposing end of the range. Always take off at the 50%. Always. Right? So this, each gray shaded area is a weekly range, right? Weekly range, remember what I said? Weekly range, each one is a new opportunity. Weekly range, weekly range. Candle 1, candle 2, candle 3. Accumulation, manipulation, distribution. Now, you look for the FVGs, you look for the breakers, you look for all that market structure. You look for it within this, because without this, you can't discern where price is going. And you'll find that market structure, true market structure, right, will actually happen, excuse me, will happen within CRT, right? So this is CRT. Each candle is a range. It's either going to be turtle souped and traded back into, or broken out of. That's the basic premise. Now, some of you are going to see this and get excited and go and try it out and think you know everything. No, you don't. Right? You know the basic premise. You have a good foundation now, right? And now on the foundation, you build more blocks of information, right? Little gems, little things here and there, which is why it's important to stick to one mentor and listen to what they're saying. Every little thing they say is linked to the base, right? For example, the lows at the 50% of any price leg are usually going to get turtle souped, right? But that happens within the CRT, right? Candle 1, candle 2, candle 3. You look for entries. You sell above. Of course, the advanced entry is up here, and that's what you see me do, right? You'll see me selling the highs, turtle soup right there, and you'll wonder why, how. You'll wonder how it is even possible. Do I work for the market makers? Do they work for me? Do I do insider trading? All those questions will be answered. But for you guys, for the public, learn how to trade, and it's easier anyway, right? Just it's easier and it's quicker to trade candle number 3, right? So candle 1, candle 2, and then candle 3. The strategy, quote unquote, is to sell above the open of candle number 3, right? For the daily candle, you're going to sell above, if you're bearish, you sell above the Monday midnight open. With the weekly candle, you're going to sell above the Monday midnight open as well, right? While monitoring price on Sunday from 5 p.m. onwards, right? This is all happening in New York time, because that's the time the algorithm functions. All right, so sell above the weekly. If you're bearish on the weekly range, remember what I said about the range a couple of minutes ago, right? Each candle is a range. If you're bearish on the next candle's range, then sell above the open of the next candle. If you're bullish, then sell below the open. All the breakers, all the order blocks, all the turtle soups, everything happens above the open and below the open. Right? Above when bearish, and below when bullish. Alright, so in this instance, you would go and you would sell above the Monday midnight open. Again, remember, open, turtle soup, decline. Always, every single time. You can ignore it at first because it may seem a bit complex to the beginner. And if it does, then that's an issue, because this is the simplest it can get, right? But you will see this happen. And go back, reverse engineer your trades, your losses, and you should have a journal, right? You should know what your losses are, because each loss is a lesson. It's cliche, but it's cliche for a reason, right? Look at your losses and see what happened. Every single candle you took a loss at could have been corrected if you looked at it through the lens of open, high, low, close. Open, turtle soup, decline when bearish. Open, turtle soup, rally when bullish. Right? Now, my trade is this one over here. I bought here before the massive rally. How do you predict that? And that was also based on CRT blended with turtle soup, right? And here's a little break, just to tell you that anything that you're going to learn outside of CRT and turtle soup is garbage and a waste of your time, right? Absolute nonsense. Oh, what about ICT? He's also... Even ICT, he talks too much, right? ICT... I give him credit, of course, for leading me towards the open, high, low, and close. Right? I consider myself one of his, in fact, his best student is me. Right? But the truth must be told. I'm not a blind sheep. Right? I'm a critical, independent thinker. So, ICT built his business model on selling his YouTube videos. So he gets paid every month by you watching, right? So it's in his benefit to make it long-winded and make you listen for hours and hours and hours, because your attention isn't free, right? Nothing is free in this world. You listen, you learn. Yes, it's beneficial. His content is the most complete content there is, but there is long-winded rants which are unnecessary, and we can all agree to that, right? So even him, I put him in that category. If you want to learn from ICT, because you enjoy style teaching, go ahead. But what I've done is I've taken all his teachings and refined them into something better, which is turtle soup and CRT. I don't care what you think about that. I don't care what anyone thinks about that. But that's the objective truth, which is it's not negotiable, it's not debatable. It's the truth, right? And I've proven everyone wrong many, many times, and I've proven myself right by having the world record for the highest accuracy in the entire trading space, in the entire trading community, right? Which is why I am in the position I am right now, which is why I get hired by the people I do. It's just some food for thought, right? Now, my trade. As we know, as you should know by now, and before I move on to this part of the lecture, remember this: candle 1, accumulation; candle 2, manipulation, avoid if you can; candle 3, sell above the open. All right, let's look at that. Let's look at that the weekly time frame. Let's view this candle from the weekly time frame, right? So candle number 1, you ignore all the other candles. Candle 1, accumulation; candle 2, manipulation; candle 3, distribution. And blend these, by the way, the candles, with the times of formation of the high of the day, low of the day, high of the week, low of the week, and you'll get a pretty accurate read on the markets. All right, candle 1, 2, 3. Sell above this open. All right, so let's go back. Good old bar replay, which I've earned by being the highest accuracy rate in the world. All right, candle 1, accumulation; candle 2, turtle soup; and candle 3 is going to be targeting the 50% and then the opposing end of the range. Always partial at the 50%. It's that simple. It's the fastest. Candle 3 is usually the fastest trade you will ever take, right? Because the manipulation is done. All the suckers who wanted to buy above the high, because rule number 1 is never buy above a high and never sell below a low, and buy low and sell high, right? So all the suckers who bought above the high, the market will never give them a chance to recover. They'll just go dump straight into the target, right? That's how the market makers move these markets. Another thing is, if you're confused about direction, always ask yourself, who's getting screwed over? Right? Because retail buys above highs. So at this specific moment, who's screwed over? Retail. Right? And regarding IRL and ERL, I'll link an IC video where you can learn the actual thing from the source, not second-hand parrots. An IRL trader would be trading till his FVG, and that's simply wrong, because the correct technical target is the 50%, as you can see. Right, so he'd partial right here, and a turtle soup and CRT trader would take it right down to the 50%. Right, some food for thought over there. Now, my trade. Let's go to the 2-day. All right, you got a CRT there. Now what happened here was a range, right? As you know, the market moves in range to trend to range to trend. Nothing else happens. It's either ranging or trending, right? Or it's a trend. Now, trading trends start from a range anyway, right? It's simply buying the range and then holding for the deviations of the range, right? Holding for a breakout. Right? The safest one is you replicate the range of breakout 1, and that's it. Safest, fastest trades. Now, a range is generation of interest on both the buy side and the sell side of the range. All right, so range. Breakout traders are looking to buy above the high, and breakdown traders are looking to sell below the low. What happens usually is it's going to trip one of them, and the first breakout of range is usually fake, and there you go, right? From range to trend, that's what happens. Range, turtle soup, trend. And I hope for your sake you're noting this down, everything I'm saying, right? And if you want to go back and watch again, 1, 2, 3, 10 times. The most successful students I have, and I have a bunch, and by successful I mean both in accuracy and extracting a shit ton of money from the markets, excuse my French, they have one thing in common. They're obsessed with the charts. They can't sleep. It's the way I was, right? They're constantly looking for more. They're always hungry. They're watching my content 1, 2, 3, 10 times if they have to, right? Because there's no way in hell that you got everything from the lecture so far. When you watch it again, the second time, you might catch some things you didn't see the first time. When you watch it the third time, you might catch some things you didn't see the second time, and so on, right? So each time is a new, there's a solidification, a solidification of the previous knowledge and building on top of it, right? A reminder is the best teacher. So don't shy away from watching stuff again, right? Repetition teaches, you know the saying. So, if the market moves from range to trend to range to trend, then this is a range, right? Range low, range high. And these are my favorite setups, where there's a clear range, price range, or time range. Range low, range high, turtle soup, and rally. Right? That's elementary. And of course, every turtle soup has a failure swing with it, remember? So what happens is range, turtle soup, everyone's selling down here. All the buyers stopped out. And then rally, everyone buys over here. It dumps almost to the low, because when the low is created, it's created at a certain time, right? They create the low, and then they get another, they dump it again once more, almost take it out, scare everyone, and then rally, right? Go back and backtest that, right? Every turtle soup has a failure swing to scare away the people who bought the turtle soup, right? Range low, range high. And you'd be done over here as a beginning budding student. You'd be done the range high from the range low, right? And if you look at the higher time frame, then this range is a candle. Candle 1, remember? Candle 2, candle 3. Range low, range high. CRT high, CRT low. CRT high. Let's keep the call terms alive. CRT high and CRT low. Right, so you look at that's the whole idea. Turtle soup. If we had closed below this candle, remember wick versus close. This is how to find the bias in the next candle. Right? So how do you find bias in the next candles? By closes and wicks. Close above the previous candle equals higher prices in the next candle. Close below the previous candle equals lower prices in the next candle. Wick above, below, not belows. Wick above the previous candle, you saw that example on the weekly, equals lower price in the next candle. Wick below the previous candle equals higher prices in the next candle, and excuse these spelling mistakes. Higher price in the spelling. All right? So this specific candle is a range. Look at this candle. All right, let's mark it with the gray area. This candle is a range, right? You go to the lower time frame, the 1 hour, the 4 hour, right? And then what you have is a range. Turtle soup, rally. That's a timed range, right? Range, turtle soup. All this is scaring people away and then rallying, right? So always think like the market maker. Always think who's getting stopped out, who's winning, who's losing, all right? That's what the market's book on liquidity, right? Liquidity sweep, turtle soup, stop hunt. This is turtle soup. CRT is turtle soup, right? They're not two separate things. How do you find an entry? Well, you'd find an entry. Of course, the first entry, the most advanced entry, is entering on the second candle. Next up, you have model 1, right? Simply wait for the candle that dug into the low, right? So that'd be this one over here. And sometimes it's clean, sometimes it's sloppy. In this case, it was a sloppy model 1, right? But it never got stopped out. Right? Close above this candle. When you close above, the wick it doesn't count. When you close above this one specific candle, then this one specific candle from the high to the wick is the one that caused this entire rally. Right? Ignore the wicks, look at the bodies. Of course, my buy was over here in this one candle. All right, so I waited for the because I like to see a thick down close candle. When I see this flimsy down close candle, you can still use it, but when I see a thick down close candle indicating a strong dump and scaring everyone, right? Those are the candles I like to rely on, right? So for me, it was this one. It was this specific candle open. You close above this candle, okay? Close here, and then this one specific candle is the one that caused the rally, and that's model number 1, right? You simply wait for any candle to stab into an old high or an old low, and that one specific candle is your entry, right? It's about entries. Turtle soup. The up close, it's not supply and demand, it's one specific candle, right? You got this here. This is your entry right here. The up close candle, the thick up close candle that stabbed into an old high, or the thick down close candle that stabbed into an old low. That's it. It's not supply and demand. It's not those African order blocks you see, right? There's a sound logic to the sequence of entries that happens, right? Entry 1, turtle soup. Entry 2, order block. Entry 3, a breaker, right? So if the breaker is hit, or the OTE is hit, then looking for this is foolish, right? It's a timed sequence. Sequence 1, entry 1, turtle soup, down here, that's mine. Entry 2, order block. Entry 3 is the market structure shift, and then you have a breaker or an OTE, right, for a second leg, right? That's enough for this video. It's already been, it's gone too far. That was a dense video, right? So in summary, what is CRT? CRT is candles or ranges. Candle number 1, range. Candle number 2, turtle soup, wick above, lower prices. Candle number 3 is going to target 50% and the opposing end of the range, swing high. All right. Now, no, this is not anything taught by ICT or anyone else. Look at it. No one has mentioned, by the way, targeting the 50% of the range. That's what we mentioned. The wicking, the closing, numbering each candle, candle 1, candle 2, candle 3. The techniques of entering candle 2. How to enter candle 3. Right, model number 1, turtle soup. Fastest. 3 is the fastest one. Right. It has the most velocity because they're in a hurry to hit the target. They're in a hurry to distribute the liquidity they accumulated above the high. Right? So that's the 3-candle model. And you find it on all time frames, every single day, all the time, every day, every week, and it will never stop. If you can catch one of these, if you can catch 4 of these on the daily time frame in 1 month, then you're a better trader than 90% of traders, right? If you can catch 1 or 2 of these per week on the 4-hour time frame, and you can, then you're a better trader than most traders. There's, excuse me, the voice crack. There is more details, obviously, on the timings of the highs and lows, and that's the final key to CRT. Is every high and low of every candle is timed, right? Weekly high and low is timed, daily high and low is timed, 4-hour high and low is timed, and time is more important than price, right? There's certain times for consolidation, certain times for expansion, and a hint is that, candle 1 is accumulation, candle 2 manipulation, and candle 3 is fast. You want to try and get as many candle 3s as you can, right? Candle 1, candle 2, candle 3. And remember, don't force a turtle soup. It'll always be there, right? If it closes above, let it go. Wait for another one. I've seen some of you forcing turtle soups and getting wrecked. Stop it, right? It's either there and you take it, or it's not and you wait, right? So it's either there for you to take, or it's not and you wait. I'm running out of time, right? Perhaps it'll be a part 2. The homework is go to Telegram and watch the pinned messages. Go see the 2023 trade highlights, right? Something like that. Go watch them. Reverse engineer all of those trades, not a single one. Don't be lazy, right? Reverse engineer all of them, and you will find that every single one was based on CRT. All of them. And the Turtle Soup episodes, the Turtle Soup series, What is Turtle Soup, is going to commence next week onwards. I hope you found this insightful. I wish you good luck, good trading, and watch it 10 times if you need to. There's no shame in that. No one will know anyway, right? I wish you good luck, good trading, and see you in the next video.